negative interest rates. Now, I find this fascinating. Over in Europe, they got, in Denmark, I believe it is, this guy bought a house and he got a negative 0.5 interest rate. So these central banks, to get the economy flowing, one of the main things they use is to lower interest rates. And when they lower the interest rates, people go, oh, I'm going to buy a house because it's so cheap. So it's been doing that for years. Now it's gotten into Europe where they're actually paying you to go buy a house. So on this next downturn or recession or depression that's coming, that we're already started into, I was thinking about buying a house and paying cash. But then I seen this negative interest rates and I was thinking, well, maybe it'd be better to get a loan with a negative interest rate, and the bank would actually be paying for some of your mortgage, which is mind blowing. But let's take a look at if you go to a amortization schedule calculator, and what this does is you can put in how much you're going to pay for the mortgage, and it'll show you what your monthly payment will be. Not only that, but it also shows how much interest you're going to be paying on each of those payments, starting at the front. So let's go ahead and look at one of these. I think this is the best calculator to really see how much more interest that you're paying. So on this one, we'll do 200,000 easy, and let's do 6% interest rate. And that's what the normal used to be. And as you can see here, you're going to be paying $1,199, and you're going to be paying $231,000 interest paid. So instead of $200,000 for the house, you'll be paying over double for the house. And if you look down here at the calculator, your first payment, here it is, May 2020. It'll be, your first payment's going to be $1,119. Out of that, $1,000 is going to go towards the interest to the bank, and then $199 is actually going to go towards your loan. So as you can see right here, the loan goes down by just a little bit. So it's still almost 200,000. So it took off about 200 bucks. And then you go to the next payment, and then you pay your 1,000 again, and then this time 999 goes to the bank and 200. So over the life of the loan, as you can see here, here's the interest to the bank, and then about towards the end or halfway mark towards the end, it reverses, and then more goes to the principal. So that's the reason it's so imperative to get a low interest rate and or pay cash if possible. All right, so let's do the mortgage calculator. This time let's do it with the negative rate. So let's put in here 200,000 like we did the other one, and then on here let's put in minus 1%, and let's calculate it and see what happens. And nothing happens because it doesn't know what minus is. It doesn't know what negative rates is because it's so insane. And I've searched the internet and could not find any calculators that would do minus negative rates. I guess the only way you could do it maybe is in Excel or something. You could do that. But so let's do this. Let's put 0.5, and then we'll pretend it's a minus when we go look at the calculator. Now, minus 0.5 is what the guy in Denmark got. So we're going to do the same thing like he got. So if we look in here at total interest paid, so instead of total interest paid of $15,000, it's actually going to be total interest paid minus $15,000, which is incredible. So instead of paying $215,000 for the house, you'll actually be paying $185,000 for the house, even though the house costs $200,000. Just insane. Now, let's say it was minus 5% or something. I don't know how they would do that. Would they just give you the house for free? It doesn't make any sense, but this is what they're doing, and this could come to the United States if it's already happening in Europe. So be prepared. So let's go down here and look at the amortization schedule. So your first payment is going to be minus, the interest is going to be minus 83 bucks. So it's actually all going to be on the principal. So instead of $515 going to the balance, it'll be the $598 going to the balance. So you'll actually take off $598 here. So the full price plus the free 83 bucks will go to the balance, which is just insane. I would love to hear your take on this. Or if the interest rates do go negative, are you going to go and buy a house or get a loan for something? If you have a house already, are you going to refinance and get that negative interest rate? Do you think this is sustainable? Love to hear your thoughts on this. Thank you for watching. Hope you have a great day.